You ever wondered why it is so difficult to trade around New York Open, where the huge volatility comes from, why you are stopped out all the time, and why it's really difficult to get out of this meat grinder, as I call it, with profitable trades? I'm a Stacey Burke style trader that enhanced his system with some own elements, and this is one of my core elements that I developed myself. I will show you in detail how I think about the open box, how the session opens, what to do with this open box, and how to place trades according to how this open box develops. So stay tuned. So what is the open box? So this you might know from my last video, my multi-timeframe approach coming into the session. So how do you think about all of that? You have your higher time frame teases in line. So what are the higher time frames doing? Breakout, fake out. How are you trading on the daily time frame? Potentially daily breakdown. So you're looking for a low-hanging fruit maybe. What's the setup on the day? So what's the 8H? Maybe 3 8Hs of long, maybe 3 sessions of rise, whatever. So you thought about all of that. Then you come into the session and you see how the 3 sessions on the day develop into the New York session. How is the first hour trading? So we are in the intra-session setup then. So you have the first hour high and low. Maybe this even breaks out into second hour. And then New York Open hits. And as I always say, and especially Peter Brands emphasizes this all the time, that charts do not predict price. So I think about it like this. Before this open box traded, open box is for me the first 30 minutes of the New York session open. So equity open 9:30, the next half hour. This is where the major volatility, major volume comes into the session. And as long as you don't know what this volume is up to, that's the traders coming in, the institutional traders. And you need to find out what are they doing. And as long as you don't have that, you don't know anything about what could happen next. You have some thesis, you have the setup on the day, you have prepared all your analysis, but this is the final kind of puzzle piece for the whole trading session. So this is kind of the kickoff into the trading window. This is the last data point you need. And then you have to think about, what are they doing? What are they up to? Who are they trapping? And very often they trap both sides before they do anything, or they trap just one side. Sometimes they also just blow through in one direction, but that's also a trap because they leave everyone behind. But that's the open box. So you wait, as you know, I always wait for third hour typically. New York Open hits, volume comes in, and then I really wait for what is this volume doing. This 30 minutes, that's the opening box. And dependent on how this opening box forms, and especially what price does after that, this is exactly the information you need to take your trades. So as I said, it's the final puzzle piece for your setup. So you have the first hour that traded. You have the previous day levels. And as we discussed in the last video, the previous day levels set your strike zones. So that's kind of the overall box for the session. Previous day high, previous day low, previous day close. This is the non-negotiable levels on the chart. You always watch that, of course. Then the first hour sets up. First hour prints a high and a low. I don't have it on here. It's not that critical, but it's always good to see, you know, are they moving first hour, second hour, third hour higher? Are they trapping longs, short, and then a parabolic, and so on? So that's important to see the 3 hour setup within the session. But then 8 hour close, so 8 hour close, 9 o'clock fixes the anchor levels. 8H high and low, you know, that's very important for me. That's the core of my system, and I always judge them. But this is still only kind of your background information for the moment. As you know, I always trade bottom up, and bottom up starts with the open box. So then open box sets the trap. So volume hits in, and then you think trap move. What are they doing? Trap the high, trap the low, blow off. Trap the high, blow off to the bottom. Whatever. There's a couple of variations. I will show you those. But this is what you observe, and you really think, what could be the trap? What do they want me to believe? Do they want me to believe that it's getting higher and trapping longs and then dumping it? Or the other way? Or do they just ranging? Are they just trapping high, trapping low, and then go sideways and wait for everybody to build up positions? There's a lot of variations, but especially then we wait for third hour, and then in the third hour, this is our playing field. Then we look at behavior of price. What does it do? Breakout, fake out, or range. So we will look into that. So that's exactly then what we do. You've seen this in all of my videos. That's the core of my system. Only 3 things markets do on every time frame. It's always the same thing. Price is always in a box. And the open box is one of those boxes. And in this box, the first 30 minutes of New York, there's a lot of volume. There's a huge volume spike. And these traders that are in this box, they are boxed in, kind of, and they might be trapped in both directions. And then, dependent on what's happening next, you have a lot of follow through. That's the idea. So if they break out, then these the short traders are stopped out, and the long traders might even scale into, and you have breakout traders on top. So once it really moves away from that, it typically goes parabolically, especially if this is narrow. So if the open box is narrow, then you get an even more parabolic move. If it's wide, it's different. I will show you that. But then maybe it just comes up and traps longs one more time at the opening box high, and then collapses in again. Then you have a fake out high that's bearish, and then it might move all the way to the other side, either to the opening box low, or maybe it just blows through and does a range expansion to the other side. Or, as we discussed in the last video, if it stays inside the opening box and grinds around, then you don't have anything. It's nothing. You just wait for it to do something with the open box extremes. Once it goes sideways here, you don't have a trade, you don't have anything. So what is the different scenarios? For me, there's of course many of those. I brought 3 of my favorite ones that I trade every day. So this is always the core of my trades, and I will show you some of my trades of the last days where I did exactly what you see here. So for me, the core options, the core scenarios to look at are, this is my favorite one. The first one I observed is peak formation high, peak formation low, 1x expansion. So opening, maybe you are in an 8-hour breakout, for example, coming into equity open. Then it prints a high, micro peak formation high, as I call it, pulling back down, micro peak formation low, maybe into 3rd hour, coming back up again. So both sides trapped, fake out low as a last one, maybe higher time frames or time frames on the day are confirming. Then you have already a long trade, maybe here within the range. And then if it breaks out, you can take even the breakout trade and go for a 1x expansion. So I always, once I have the opening box, I immediately take the range expansion tool and pull one full range expansion. And this is a very important level then. So you can either take the fake out low for the range, you can take the breakout and then take it to the 1x expansion if you are in a bullish overall situation. That's the first one. Peak formation high, peak formation low, one full expansion. Then always, of course, dependent on timing. So this is always good if this aligns with 30-minute rotations, or maybe even with the 1-hour rotation, you know, my time rotation thinking. Watch the clock, it's all clockwork. 15-minute, 30-minute, 1 hour, place your trades within those checkpoints. Then parabolic reversal. Maybe it's a bearish overall situation and it's the opening box is pretty deep low. Traps the low, traps the high, trades inside, breaks out, but you don't take the breakout if 8 hour is in breakdown. So you wait, it's coming up. 1x expansion, important level, typically reversal. So it hits the 8H, 1x expansion of the opening box, reversal, engulfment, and then you trade it back down. Maybe to opening box high, or then depending on timing, behavior, you might take it all the way to the opening box low, or even to range expansion to the other side. This is then dependent on the overall situation, of course. So this reversal can also be a parabolic reversal in breakout. So I often trade that. So if you have a breakout trade here, that's kind of the same logic here. If you just break out, and then maybe you can even take the short after the long. So you take the long up to the 1x expansion, and then if you like what you see here, if it does an M15 or a H1 fake out high engulfment, then you just take the short trade back down. And typically this, especially late session, you get very nice collapses back to the opening box or through to the opening box low. Then third option, range. So sometimes this is a very wide opening box and you come into third hour, it just makes a fake out high, and then maybe you are in an overextended situation or in a bearish situation. Then this is a very nice trade to trade the range of the opening box, just from opening box high down to maybe here 8 hour as a checkpoint, or all the way to opening box low. If it's medium sized and if the higher time frames are not clear or conflicting, then I would typically ignore it especially once it trades inside. But if it's a wide opening box and you get a fake out high, this can be a very nice trade in third hour to just go to the other side of the opening box once you have confluence. So let's look at some examples of this. So here, first example, it's DJ 30 2 days ago, Wednesday the 5th, coming into New York session here. You see it's an overall bullish chart. It's an inside day, so you're expecting already parabolic moves. You see the 8 hours in breakout, the 4 hours in breakout. So this is always how I judge the situation on the day. As you know, this is my own indicator, TrendPredator. It helps you to judge the multi-time frame situation. It tracks it real time. And for the opening box, I have an own indicator. If you join my Discord, I show it to you. It's there in other interesting indicators. And you see here, I have always for the opening box, here is in London, the dark green London, for example, it's first hour high and low, and the light green is the opening box high and low. So in London, I look at it the same way, but now we look at New York. Here is first hour high and low. And then we come into the session. This is equity open. And then we are up here. We mark the New York open level, as I call it. Here is the 8 hour high. And then we just observe how the opening box trades. And here we see it does an 8 hour fake out high. So trapping the high nicely, pulling back down. That's the first thing you see. And then it collapses all the way and does a breakdown of the 8 hour. You see here 8 hours in breakdown. So you're down here into third hour. Overall, week is bullish, so I wouldn't short that. So if I'm here and it comes that impulsively into the low, I'm observing further. And then you see here, and I really also took this trade. It very nicely traps the shorts here and comes back in again. So 8 hour fake out low, opening box here, that's this one here, opening box high, opening back box low. So you do a fake out low of the opening box, and your entry is then here 5 minute close inside of the opening box. I took this entry, and then your first trade is the high of the opening box, as we just discussed in the theoretical examples. And then you see, you let it run, and it runs nicely, hits here the New York Open level. That's always a level you have to be a bit careful of, and the 8 hour. And I think I might have even cut the trade here, because you then come into end of the session here, 1 hour rotation at the 8 hour level. So I think I cut it here, but as you see, it would have even went further. And then after the session, it even breaks out. So if you are trading late session, you could argue that the whole session here was a trap. Then it breaks out of the opening box. So this could be a trade, 30-minute rotation, right after the 12 candle window. And then you see, you mark the one full expansion of the opening box. That's this level here. You mark this with a range expansion tool. And then let's see what's happening. It's just breaking out of the opening box. Bang, hits the opening box, consolidates sideways. That's your perfect take profit level. So this would be, even if you think this is a ain't come back trade, I could have held that from here. I mean, it's a very nice position from there, and you let it run into end of the day if it was a Wednesday. So this could be even valid. I typically don't do that, but you see here nicely, opening box, fake out low, trade through the opening box, breakout, one full expansion, done. That's exactly how I think about the opening box, and this was absolute textbook scenario. So next example, that was yesterday, February 6th, DJ30. That was actually a trade triggered by Stacey's new Ain't Come Back Logic ACB masterclass. I'm looking at that a bit at the moment and back and forward testing it. So if you're interested in my progress there, you can also look in the Discord. We have a discussion channel there, and also I made have some results already to show there, how it trades and how I think about it, especially also how it connects with multi-timeframe. So US 30 yesterday closed in breakout on Wednesday. So this was triggered as a signal, and then we look into it. Overall, it was still quite bullish. As you see here, also the indicator flashes still a long setup, so no short for the moment. You have here the previous day high and close, so it's trading above that. New York Open hits. We are inside the 8 hour level, so for the moment it's still bullish and there's nothing to think about a short yet. So what are we doing? We are waiting for the opening box to trade, as always. And then you see here, I think I have it a bit wrong here still. We have to pull it a bit more down like this. That's the opening box. You see here, opening box high. That's the indicator I use for it. It's an initial balance indicator that you can specify specifically, and it always shows me this opening box high and low. So first 30 minutes of the session into third hour, that's your opening box. You are at the low. So interesting, you have already a daily fake out high from here. This is confirmed. I switched off the breach levels for the moment to have it more clean. And then you are here at the 8 hour. So this shows for the moment fake out low in real time, because it broke the low and then pushed back up again. So no entry as long as you are above the 8 hour level, but I know already if this collapses through, this is my entry. So I'm waiting a bit and wait what it is doing. And then you see here, that is exactly what I want to see. 3 wicks to the upside, so that's a nice long trap. And then it collapses with 15-minute rotation through the 8 hour low, and then you have your opening box breakout trade. Higher time frames bearish now, so the day is bearish, 4 hour, 8 hour bearish. The higher time frames were bullish, but it's pretty overextended here. High close of the month after 3 higher closes, as Stacey also thinks about it. Then you pull your range expansion of the opening box. You have here is the first one. and down here is the second full range expansion. I typically go for the first one, as you know. Then I entered here with a 15-minute rotation, and then you let it run. And then you see here how it trades into this opening box range expansion level. I think I already cut it here with the 30-minute rotation. Most of my trades are just 15 minutes. This was already 100 pips or so. Then you see it works into the one full range expansion level. Here is the 1 hour rotation. This could be the typical exit, but it was an ain't come back trade, so you could have also held on to that. And as you see, it just went into the second range expansion. I mean, you really have to walk away for this trade and then let it run and let it trade. But then overall, this was like a 300 pip move, 2 full range expansion of the opening box, and it hit the naked session point of control, how I called it, the New York Open level of yesterday. So all the liquidity from the open from yesterday was still on the chart, and it just goes there, hits it, takes it, and this is a very nice trade for 2 full expansions of the opening box into a 30-minute rotation, and then taking the liquidity of the New York Open, and then I think from there it just goes sideways. So this would be the breakout trade from the opening box, also showing very nicely how you can think about that. So next one, gold, the opening box range expansion reversal trade. This is gold, 5th of February, Wednesday, so 2 days ago. All-time highs, very bullish. I did not take that trade. I took a silver trade in parallel that was quite similar, but I like this gold scenario because it even aligns better with all the criteria. So what's the situation? All time frames bullish for now. Week in breakout, day in breakout, 8 hour in breakout. But as you see here, all in three longs overextension. 4 hour already 3 long overextension, first red and inside. So we are trading inside the first hour high and low naturally, and we are trading within the 8 hour high and low for the moment. And then New York Open hits. Nothing to do for the moment. You could do a long trend trade if you like, but I wouldn't do that here with an 8 hour fake out high. So let's just watch now what the opening box does. So here you see now this is in breakout, so you could even take an 8 hour breakout opening box breakout trade, but I wouldn't do that into the high of the day from here. That's just too narrow. So here you see again they trapped the lows, the shorts, trapped the longs, trapped the shorts, and then now went long, broke out of the opening box. Only 3 things markets do: breakout, pullback, continuation at all-time high. Very overextended, so no long for me, but I'm watching laser eyes and as a predator and watch what's happening. So what is happening? We are marking the 1 full range expansion of the opening box. That's up here. That's our level to watch. So let's see what's happening. It's trading up here, and we are reaching end of the session, 1 hour rotation. So you know that's the moment to watch it. And then you see we get a very nice peak formation here. That's the breakout level on the 5 minutes. So we have a 5-minute fake out high here into 1 hour rotation, rejecting the 1x expansion level. So that's very nice. So if you're really aggressive, you could take it here. I typically wouldn't do it because you are in an 8 hour breakout still. So to be safe, I typically wait for the 8 hour breakout to be lost. This would be here then. Let's see, it falls through. So there you would need to enter aggressively with the cross, which is fine with all this pattern. Very nice trap at the high, collapse end session. And then you see it just collapses all the way through. Where to? New York open level. So that's all the longs from the opening box low. It just falls into that and finishes the trade as I've shown you before on the theoretical page. That's absolutely textbook. Stop loss above the high into third hour, 15-minute trade, 3 5-minute bars, done. It was a huge trade. You see here reversal high of day, counter trend, 2-star because it's overextended uptrend. Very nice trade. Everyone that took that, congratulations, but I think not many will take that because it came so surprisingly at this moment. If you don't watch these time rotations, you typically don't get into that because it's very bullish. Most people think it will go to the moon for now on Wednesday, just into the end of the day, and then boom, they just take out all the longs, take the liquidity, and then they go sideways and call it a day. So that's the reversal trade. One more trade example left. So last example, the ranging example. That's NASDAQ yesterday, February 6th. And you see the examples are just recent because this really happens every day. So let's look at this range. This was also closing breakout on Wednesday. So I had it on the list for ACB setup, rather a short one, short setup. But here you see now why I didn't take that and why it never even brought it into the list of considerations for a short trade. So here, New York open hits. You have the first hour high and low. 8-hour range is here. So we are right in the middle. Previous day closing price is here. So there's nothing to do. We are in a daily fake out high. 3 days of long, overextended. That's not too bad. Week is in fake out low. First red week. 8-hour first red fake out low. So in 8-hour fake out low is never a short, so we wait for that to develop. The context at the moment would say reversal counter trend because we are in a daily fake out high. So let's see what it does, how the opening box trades. So we have the opening box down here, so that's the first wick. So with the open, a wick to the bottom, trapping shorts, immediately pulling back up. That's the first hour low level it wicked into. So we have a 1 hour fake out low. Then it breaks out, and you see even with the first hour you can do it in a similar fashion. So this would be a 1x expansion, but we don't look at that for the moment. We look how the opening box trades. Opening box is here now. It's a 100 pip box in this case, right below the 8-hour. So we are trading around here above the New York open level. It pulled back into that. Everything between levels, trading inside the opening box. So there's nothing to do as long as you are in the box. You don't take any trades and don't do anything typically. Then you wait what's happening. It's breaking out, as you see here, into third hour, 8-hour fake out high, coming back in, losing the opening box high level. That's exactly the range trade. So you can aggressively take this one, especially after the 8-hour fake out high. The day is still in breakout, but here the indicator flashes reversal high of day in an extended uptrend, counter trend situation, 1 star. So you can take that, especially if you're so nicely within the opening box. So entry would be here. Target is then the low of the opening box, exactly 100 pip. What did it do? It just falls through. I mean, it did a nasty stop hunt here, but if you take the stop here behind the high or behind the last bar, then you would have been safe. Still, that is very nasty and could have shaken you out of the trade, but still you get the point here. It just trades through to the other side. You see here a wick into first hour low and opening box low, 100 pip short trade if you like. And then it still stays within the opening box and goes sideways. So this is exactly the scenario. It doesn't break out. It just three things that markets do. It's ranges, so you can take a range trade, but this never confirmed the Stacey Burke ain't coming back trade. I mean, also if you look at the ribbon in this case, I think it was still below that here, so there was no way the EMA even confirmed that. And especially looking at the opening box, you're inside, so you might have a range trade. I typically wouldn't take that because there's better trades around. But here you see exactly once you're inside the box, you are inside the box. As Stacey says, if you're not outside, you're inside. And if you're inside, you don't take a trade typically, or just fade the edges and take a range trade. And from there it just went sideways, and then I think it even blew through the top end session, broke out of the opening box, and then made the it even took the long one more time. So really ranging, very choppy price action around the opening box, and you see immediately here how the edges of this opening box are then respected deep into the end of the session. So that's the examples. That's one of my major tools. As I said, I do this every day. I think that's really a strong part of my edge, because I always start with this opening box, and if I see what it does, then I start looking at my analysis. So I first do all my analysis, higher time frames, day, session, and then I trade the opening box and look at it, and only if this gives a nice pattern, then I reconsider my higher time frame thesis and might take a trade from there. So if you like that thinking around trading, like the video, subscribe to the channel if you like, or join us in the Discord. If you follow these links here or in the description box, you come to my Discord. There's a free document. There is a link to the TrendPredator indicator. I have the opening box indicator on my Discord. I can show you how to get it there. There is also the ACB material I just did. So we are discussing this type of trades and trading style all day. You can ask me everything in the description box here or in the comments or on the Discord. Feel free to do that. Hope you liked it, and I think this could be very valuable for you. Thanks for watching and have a nice day.